Hello and welcome to my usual weekly stock market review. Well, the week was a very interesting week of two halves. It started off with a strong correction because oil prices were ruling at about 110 to $112. The rupee was under severe pressure on the verge of touching 97, and it reflected in a sharp market correction in the beginning of the week. However, things quickly changed around with easing geopolitical tensions in terms of forward looking for the war to end, leading to oil prices coming down from 112 to currently around 104. The RBI also intervened sharply in the rupee and strengthened the rupee by almost $1, ending at 95.69. So if you then see that initial part of the week, the IT sector gained on the back of the rupee depreciation expect and the fact that there was a huge value buying coming in from a 25% plus correction year to date. Pharma also gained in that period, but though both IT and pharma gave up their gains towards the end of the week with the strengthening of the rupee, IT had risen so much that still ended the week as the best return delivered, 4.3% weekly return. The other thing noticeable for the week was that despite this oil price strengthening, FIS continued to maintain their negative stance and selling, but DIS more than compensated with their strong buying, and retail and HNI also supported it. Hence, the best performing sector were oil and gas, defense, and realty. But at the same time, the worst performing sectors were the pharma, which gave up its gains and because of some results not being great, and the consumption pack, which is both FMCG and consumer durables. What about the week forward? Well, the important thing to bear in mind is that Mr. Trump has just tweeted saying that he's close to a deal and looks like a 60-day fresh ceasefire to solve the agreements may be in place. In fact, he cancelled the visit to his son's wedding to rush back for this. So clearly, there is something cooking there. Hopefully, fingers crossed, it converts into an actual ceasefire for 2 months, which gives a big relief to the markets, and oil prices should reflect. Right now it's 104, it might even head sub 100 during the week. So that's the positive signal for the coming week, but it's also the last week of the month, options expiries, so increased volatility will be there. I expect DII and retail buying support to continue because even the earnings that came through this week were fairly on the positive side. So reduced volatility, but still a consolidating market, hence no need to change your decision making in terms of investments as you have been following. Look forward to my next update.